evening, everyone. Welcome aboard. June 24, 2010. Joseph James, schooltrade.com. Here's your live trade recap. Guys, had another great day in our live trade room. We've got FOMC day behind us. Another big month of June. Before we talk about the trades we took today, guys, I want to remind you, right below the video, guys, we'll take you a link to our blog. Now, you can go to our homepage and find the blog there. You can go to the blog link below the video right now. But make sure you guys get to the blog right now because we have a brand new section on our blog called Trade Room Resources. If you're looking for more information about how to follow along with us in the trade room, maybe you want some extra videos, a little bit extra help to understand what we're talking about, the Trade Room Resources section is going to be perfect for you. Lots of handy videos, all of our daily notes, so make sure you guys check that out, guys, on the blog. The link is right below the video here on the newsletter page. Let's see here. We took 2, 4, 2, 4, 6, 8, 9 total trades. We had a little bit of loss there on the S&P. We'll talk more about that. Another big month, though, as you can see here in June, guys, 137 ticks today. That could have been over 150, guys, without that loss in the S&P here. 4,000 this week, 1,350 for today, and a monthly total now of over 16,000 USD. Only 4 contracts, guys. If you're still on the fence, there's no better time to join than now, guys. Come join our advanced membership, and we'll see you guys in our trade room tomorrow. Let's see, most important thing that happened today. Well, of course, now FOMC is behind us. Yesterday was the Federal Open Market Committee announcement at 2:15. So, of course, that's now behind us. We had jobless claims and durable goods early this morning at 8:30 Eastern Time. That gave us a little bit of price action to kind of get today's jump started. But, guys, it kind of felt like everyone was, kind of felt a little bit slow and sluggish, almost like we had a hangover from Fed Day. And it almost felt like people were getting the barbecues warmed up, right, for the soccer or the football matches this weekend. So I think today was kind of one of those days where we had one foot going to the weekend, one foot at the FOMC day yesterday, and today everything went sideways. We had wedge patterns across all markets. Gold, crude, euro, dollar was flat. But guys, what makes me so confident, what makes me so happy about our results right now is that we haven't changed the way we've done in the trading. We've had some pretty tough price action, right? Last week was quadruple witching. We had OPEX last week. This week was of course, FOMC day on Wednesday, right? So we had ourselves a challenging last couple of weeks, but we haven't changed anything. We simply stick to our rules. We put the blinders on. We don't get distracted by low volume trading. We don't get distracted by other options that are in the markets. We stay focused on our rules because our rules do the trading for us. Our rules will keep us out of the bad stuff, put us in the good stuff, guys. And so all we do is stick to those rules. Just keep following my rules, keep taking my patterns, and guys, at the end of the day, we'll count up all of our money. Some trades will be winners, some will happen to be losers, right? We all take losses. It's how we react to those. So we got to stay focused on trading through these difficult times. Keep following those rules, keep working hard, and at the end of the day, guys, we'll get a couple big winners that will make our entire day. We saw that today, right? Choppy day, but a couple really big winning trades made us all the money we needed today. Okay, so keep following those rules, keep trading through these choppy times, and guys, nothing's changed. We're going to keep making money every single day in our trade rooms. Come out and join us tomorrow. Now, guys, here's a great example on the gold futures of what we saw on almost everything today. Now, we're going to use a fast time frame chart, an 8-range chart on the left, and then on the right side, this is your pace of tape indicator. All right, so I've got my fast time frame here on the left, and then, of course, you got your pace of tape indicator here on the right. Now, I want you guys to see, first of all, wedge pattern, right? Wedge pattern. Trend lines from the downside, trend lines from the upside, and, of course, here we are right in the middle, right, trading in the middle of that wedge pattern. Now, wedge patterns are very common during low volume environments. And so when we start seeing a wedge pattern like this, we know right away where there's smoke, there's fire, right? If there's a wedge pattern here, that means we're not pushing the extremes. We're slowly consolidating, right, as we go further and further, okay, towards the end of this wedge. Okay, so as we get closer to the wedge pattern here, we're going to start seeing this price really begin to tighten up. And then what I'm going to do is I'm going to look for a breakout and then look for a pattern once we break out of that wedge. Okay, that's the easiest way to trade a wedge pattern. I'm going to stay away from the middle here, wait for the breakout, either upside or the downside, and take the trade from there. All right, guys, but this is what you're going to typically see. You've got the trend lines from the upside, trend lines from the downside, all right, and then look over here in the lower right-hand corner. Here's your pace of tape. Now, notice when we test the highs, the speed slows down, right? Green means fast, yellow means moderate, red means very slow. Okay, so we're slowing down as the speed, right, as we come up and test the highs here. Okay, so what's happening is while we come up and try to break out of this wedge pattern, Okay, we're up top here. We're breaking out of the wedge pattern here. What do we see? We see fewer and fewer people are interested in trying to be the first ones to buy those highs, right? That's basically what this is telling us is that the speed slows down because that's what the pace of tape measures. The pace of tape measures the speed at which the orders are coming into the market. Fewer orders come in as the price rises and tries to break out of that wedge pattern at the top. So this is going to be a classic example, guys. At the high of the wedge pattern, if you're seeing the slowing of the speed, well, guys, that tells you right there, be very careful now. Okay, because this will probably roll over, come right back down in the bracket, and stay here and go sideways. Now, in the event that we see the speed spike, again, we're going to look for a breakout above or below the bracket there, and we'll take a trade from there. All right, now, we took, of course, here 2, 4, 6, 8, 9 total trades this morning. Let's get it started here. First trade here was on gold. We went gold, crude, gold, S&P. We finished up on gold and crude today. Now, take a look here, guys, where the price level is right now. Okay, what's the price level here on gold? We've got 36, right? 36.8. 36.8. Now, do you remember where that wedge pattern was? Look back over here with me. Okay, where was that wedge pattern? What is it? Yeah, you got it. 36.8 right there. See that? So we're going to break out above the wedge pattern. Okay, we break out above. Once we get above that 36.8, what do we always say, guys? Wait for the big, right, those red lines. Whenever we break a red line or whenever we fail to break a red line, that's when we're going to have trading opportunities. So we break above the wedge pattern. We knew we had to get above that 36.8, and now let's go back and take a look at where our trades are going to be today. Because that's all we had to do. We waited for the wedge pattern to break. We got above the 36.8, and then here we are on the gold. Right? We saw lots of opportunity there. So once we broke above the 6.8, here we go. First trade of the day. Right? Breaker pattern long. We're going to come up. We break above the 6.8. Right? There's your first opportunity. Now, I missed both of these. I was watching something else. Okay? So we were watching slower time frames. But thank gosh, one of our members said, hey, Joe, heads up. Gold's breaking above. So by the time I came back and found this, right, a bunch of you guys already grabbed the first two moves here. Here's the first one. There's the second breaker. By the time I got my hands on it, we had already come up and tested the high of day up top here. And so, of course, we test the high of day. I'm looking for a bounce off the high. There's my swing low. We break below that swing low. There's a reversal, two-step pattern short, 38.5. We took 2 off at 4, 2 off at 1. That's 10 ticks or 100 USD. Now, once we came back to the downside here, we then bounced off more support here, 36.8 or so. We mark up our swing high, and we take the break back above the swing high, another reversal. Okay, so we've got second trade here, two-step pattern long. We took two-step pattern short at 38.5, made 10 ticks. We then take the reversal here off this level of support, 37.5, 2 off at 4, 1 off at 8, 1 off at 1. There's 18 ticks or 180 USD. Okay, so a nice, easy trade pattern here, guys. And it all started by knowing exactly where we had to be to see the highest percentage trades. Now, look here, guys. This is where the two-step pattern came in play. Notice this sideways range here. Right? Notice this sideways range right there. Okay, and notice now we're going to short the high of the range and we're going to buy the lows of the range. Right? Two-step pattern short off the highs. We then came down, bounced off the lows, and we take a two-step pattern long. Okay, total up, guys, 18 ticks in the second trade, 10 ticks in the first. That's 280 USD by simply waiting for us to break that wedge pattern, and then we saw the opportunities come in front of us. Now, of course, you could have grabbed the 16 or 20 ticks there of the first two breaker patterns, right? Of course, big heads up there. Congratulations to our members who made money with that today. All right, guys, there's the first two trades of the day on gold. Let's now move to crude. Okay, over on crude here now, we have another two more trades here. Now, this is another good example, guys, of a two-step reversal. A reversal pattern, we're going to be trending down. We're going to bounce off support, right? Does not need to be the low of day. The low of day was down here. We didn't get to the low of day yet. We bounced off support here. We mark up our swing high. We break above that swing high, and we took two entries here because you can see it got real choppy here real fast. Right? This two-step pattern long, real choppy price action. The first one at 10 o'clock, 86. We took +4, +1. That's 10 ticks or 100 USD. And then 1 minute later for re-entry right there, right in the re-entry there. 1 minute later, 91 was the fill. +4, +1, another 10 ticks. And again, that's +4 target. Then I'll move my stop up to entry +1. And we'll get taken out entry +1. So very choppy, but we got 20 ticks here. So we took 28 ticks out of gold. Then we took 20 ticks out of crude. Let's keep moving.